Welcome to Trading Intelligence LLC. Exchange Traded Notes. Episode 2. This video shows you 8 high-yield covered call ETFs and ETNs. A covered call is constructed by holding a long position in a security and then selling call options on that same asset, representing the same size as the underlying long position. Professional market players write covered calls to boost investment income, but individual investors can also benefit from this conservative but effective option strategy. Covered call ETNs and ETFs provide a unique opportunity for individual traders to expose these products for high cash flow. Covered call ETNs and ETFs can be found in the following 2 asset classes: equity and commodities. Global S&P 500 Covered Call ETF, XYLD, tracks an index of S&P 500 stocks and sells 1 month, at the money call options on up to 100% of each stock. XYLD offers a new twist on an old strategy, writing calls against the S&P 500 stocks in its plain vanilla basket in order to earn the premium. Holding the various positions and writing index call options inside of an ETF wrapper is a more efficient way to access the strategy. XYLD has $667.34 million assets under management. It has a distribution yield of 9.16% with an expense ratio of 0.6%. Global S&P 500 Covered Call and Growth ETF, XYLG, tracks an index of S&P 500 stocks and sells 1 month, at the money call options on up to 50% of each stock. XYLG attempts to provide the best of 2 worlds, growth and yield. The fund holds the stocks of the S&P 500 index and writes 1 month, at the money index call options on half of the portfolio value. The call options are held through expiration, either expiring or settling in cash. The fund looks to earn some premium income from half of the portfolio and allowing the other half upside potential. Holding the various positions and writing index call options inside of an ETF wrapper is a more efficient way to access the strategy. Global X Nasdaq 100 Covered Call ETF, QYLD, tracks an index that holds Nasdaq 100 stocks and sells call options on those stocks to collect the premiums. QYLD seeks yield from the Nasdaq 100 via options premium. Historically, investors came to the Nasdaq for growth, not yield. While that dynamic may be shifting as tech giants mature and begin paying dividends, the fact remains that pure-play S&P 500 funds offer more yield than the plain vanilla Nasdaq 100 fund QQQ. Enter QYLD, which matches QQQ's Nasdaq 100 exposure, but earns income by selling call options and passes it on to investors net of fees. QYLD has $4.88 billion assets under management. It has a distribution yield of 11.51% with an expense ratio of 0.6%. Global X Nasdaq 100 Covered Call and Growth ETF, QYLG, tracks an index that holds Nasdaq 100 stocks and sells call options on half the value of those stocks, to collect the premiums and allow for growth. QYLG is passively managed to provide both the potential for growth and some yield from the Nasdaq 100 index. Historically, investors came to the Nasdaq for growth, not yield. As tech giants have matured and began paying dividends, enter QYLG, which looks to provide a little of both worlds. The fund matches QQQ's Nasdaq 100 exposure, but earns some income by selling 1 month, at the money call options on half of the portfolio. Global X Russell 2000 Covered Call ETF, RYLD, tracks a market cap selected and weighted Russell 2000 index along with call options for the underlying index. RYLD holds the Russell 2000 index while holding a succession of 1 month at the money option of the index. The fund follows a buy write, or covered call, strategy on the underlying index, where it buys the constituent securities of the index, or purchases other investments that have economic characteristics that are substantially identical to the economic characteristics of such component securities. At the same time, the fund writes, or sells, call options that correspond to the index. RYLD has $540.15 million assets under management. It has a distribution yield of 11.53% with an expense ratio of 0.6%. Credit Suisse X-Links Gold Shares Covered Call ETN, GLDI, offers the returns of a covered call strategy comprised of shares of the ETF GLD, a physical gold ETF, and 1-month call options with a strike price of 103% of GLD. GLDI adds a new twist to the gold segment, tracking an index that uses a covered call strategy to add income to an asset devoid of yield. The notes index mimics a hypothetical GLD position, coupled with a short position in GLD calls expiring the next month with strike prices 3% higher than the price of GLD at the time of sale. The premiums from the short call position are replicated with coupon payments and are subtracted from the value of the index. This widely used strategy adds yield, but at the cost of upside participation. It's therefore likely to perform very differently from spot gold prices, and not for those looking for pure gold exposure. GLDI aims to distribute yield of about 14.26% monthly, typical of an ETN, and it has $116.12 million assets under management. Credit Suisse X-Links Silver Shares Covered Call ETN, SLVO, offers the returns of a covered call strategy comprising long shares of a physical silver ETF, SLV, and short 1-month call options with a strike price of 106% of SLV. SLVO is neither the choice for those looking for exposure to physical silver nor does it provide pure exposure to silver futures. SLVO is structured as an ETN, so it promises to track silver and options on silver, not to hold it. Furthermore, its index has a notional short call position against the notional long position in the physically backed silver ETF, SLV. The calls are set to about 106% of the SLV's price level. The covered call strategy gives investors indirect exposure to silver, but with limited upside, as the nominal long position will get called away in periods of sharply rising prices or in volatile market environments. The trade-off is yield, as premiums from writing calls on an otherwise yield-less asset. SLVO aims to distribute the yield monthly, typical for an ETN, and it has $243.81 million assets under management. Credit Suisse X-Links Crude Oil Shares Covered Call ETN, USOI, offers the returns of a covered call strategy on a front-month oil futures ETF. USOI adds a twist to the crude oil segment by extracting income from oil futures exposure. The ETN provides the return of USCF's popular front-month oil ETF, USO, coupled with a notional short position in USO calls expiring the next month with strike prices 6% out of the money. The strategy adds yield and lowers volatility compared to owning USO outright, but at the cost of upside participation. Therefore, USOI is likely to perform very differently from crude oil futures. USOI aims to distribute yield of 38.34% monthly, typical of an ETN, and it manages $157.80 million assets. To summarize, this video reveals 5 equity covered call ETFs, which include XYLD, XYLG, QYLD, QYLG, and RYLD, and 3 commodity covered call ETNs including GLDI, SLVO, and USOI. These high-yield ETFs/ETNs can be lucrative investment to create consistent cash flow for your account. Thank you so much for watching. If you like this video, please like and subscribe to our channel.